Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Jobs Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick here with you this morning. As I mentioned, we have a jobs number coming out in about a half hour or so, so we'll talk about that. Preview that number, talk about the reaction after it comes out. And before that, we have earnings to discuss, most notably Amazon yesterday, but a number of other big ones. Symantec, we have Signal this morning, Chevron, Exxon. So a number of notable earnings to discuss on top of the Amazon number. We also have weakness in the healthcare stocks this morning, so we're going to talk about that and why that is. And two guests on the docket for the day. First up at 8:35, we're going to be joined by Lydia Idem Finkley. She is a Forex trader at faithmightfx.com. And then at 9, our funniest guest that we have, Bill Santiago, comedian and trader. He will join us at 9 to talk about what he's been watching in this market. Joel, what is a good word on the overnight session?
We're down 6 handles in the S&Ps. We made a fresh high of the rebound at 27.1175 amidst some crazy action after hours. We'll go over that with Dennis. Pre-market low, 98 even. That's where we're trading. We just keep creeping lower. 96.50. That's my potential support area here this morning. That's your daily pivot. After that, look out on the downside. Crude, wild range yesterday, got near 55, now back under 54. So we'll be keeping an eye on that closing price of 53.79 as we're only down a nickel. Gold in the green again, up 7 cents here, 13.25.90. Silver in the red as well by 9 cents at 15.985. But before we bring in Triple D, Spencer, I fixed your car yesterday. Is it still working?
You fixed it, and then I had to. Well, you jumped it, and then I had to jump it again like an hour later. But yes, the car is working now. It's okay. Joel to the rescue yesterday. Joel came by my place, jumped my car for me, or helped me jump my car. Gave me a live engine, and here I am. So it all worked out.
Yeah, I can always be an auto mechanic here if I'm not on the pre-market show. But Triple D, your head is on a swivel. It was on a swivel yesterday. Yeah. It's on a swivel this morning. Let us know if you need to bolt out for anything, any reason. But boy, oh boy, you were fired up on the pre-market show. What kind of action you seeing?
I mean, this has got to be one of the dumbest markets that I've ever seen. I've been trading for 20 years, full-time, prop, 20 years. There is so much dumb money out here right now, like just doing dumb things. I mean, for instance, last night, and I could not figure this one out. At one point in time, Amazon was down 85 points, and the S&Ps are trading up 6. I'm like, what the hell's going on? I mean, how or who is buying the S&Ps trading up 6 points when Amazon is down 85, and you got a bunch of other tech stocks down, and you got a bunch of healthcare stocks down because of what Trump was saying, but yet the S&Ps are trading up 6. I was like, what is going on? Am I in like wacky world here? Anyways, you come in here and it's corrected itself, but I don't know who or if it's multiple people buying the S&Ps last night. Guys and listeners, if Amazon's falling 85 points and you got, other stocks all getting their heads ripped off, healthcare was really beat up last night. Odds are we're not going to be up tomorrow. So anyways, if whoever was savvy enough to be selling when we're up 6, we're now down 5. So, or not even, we were up even more than that. We were up like almost, how many points were we up last night? Say like 5 o'clock, Joel. After Amazon for a while, was there, but around like 5:30, 6 o'clock, that's when I had the real fall from the conference call. And fell 85 points, and S&Ps is still trying to go higher.
We got up 7.5 handles on the close. 04.50.
Does that seem logical to you? That Amazon can be down 80 points and we're up 7 on the S&P? Is that logic?
It's not logic, Dennis, but that
Anyways, I was shorting S&P. I was shorting the SPY up there because I'm like, this is just dumb. I wish I would have just like mortgaged my house and short everything because I'm looking at that. So the SPY traded up to almost 271 last night. Craziness, absolute craziness. 269.50. So it's $1.50 sitting there. 15 handles. We're 15 handles lower than the high. Is that right? Almost 14 handles lower than the high.
Exactly.
Yeah,
exactly.
craziness. Anyways, use the tea leaves. Amazon falls out of bed. Everything just sat there, and the market's like, we don't care. I even tweeted last night. Honey Badger Market don't seem to care that Amazon's down 85. Anyways, it does eventually care. It is trading down here. There's so many other news, but you know what? Resilient market here, and I wouldn't be surprised if we go green. You can just see there's a lot of stocks that want to go green here. ExxonMobil, which just came out, is going to help. Merck is going to help. I mean, they're trying to find Honeywell. So there's some good earnings here this morning. But last night, none of this information was available to us. So there's reasons now that the S&P wouldn't be as weak, because we do have some pretty good earnings from this morning. Last night, there wasn't no reasons for it to be trading up there, though. And here it is. After 3 good reports this morning, the S&Ps are still trading down. So whoever's buying it up 7-8 points last night isn't reading the information that's directly in front of them. Anyways, that's my little rant on dumb money. There was dumb money out there last night. Amazon report, obviously.
Do you want to do the close real quick?
Yeah, dumb money. We're sticking on the dumb money theme here, guys. So you want to see dumb money? Bring up the intraday chart of Johnson & Johnson. Who the hell's selling like 1 million shares on the close? Anyways, Johnson & Johnson goes from 135, happily trading 135 with 2 minutes before the close. I'm looking, and there's huge sell imbalances. Anyways, it runs down like 10 seconds before the close, and then gaps down another $1 on the close to 133.08. This is J&J. Basically ran down 2 points because of an imbalance. Check out Starbucks. This one wild. Happily trading at 69, all of a sudden, kaplooey, down at 67 and change, ends up closing in the 68 handle. These are all from huge sell imbalance at close. Institutions has thrown out big orders. And yes, it was the end of the month, but come on, don't just send these orders randomly hoping the other side's going to be there, because if it's not, you're going to be selling at a really bad price. I hope, I don't own any mutual funds, but I would hope if I did that I wouldn't be invested in these ones, because these guys don't know what they're doing. The smart money wasn't very smart last night. McDonald's MCD gapping down $2 on the close. Burke.B gapping down $1.50, almost $1.50 on the close. You had Costco running up $4 on the close. What's up? For real? From these large orders? This wasn't fundamental information. It's just large orders. Anyways, crazy moves. I'm disappointed in myself because I actually forgot it was the end of the month. I was tied up doing some things. Forgot it was the end of the month until like 5 minutes before the close. And I'm like, oh, so I didn't have any of my automated systems running, or would have picked up some of this stuff. But, so that's my fault. So I'm dumb money too for forgetting. But then I was noticing there's so much going on in the preferred market, and I trade preferred stocks too, and there was huge orders on the preferreds. So I'm trying to focus my energy over there. I know you can't bring these up, but like ALL.PRA. Syncap's down like 70 cents on the close. It's like its biggest move ever. So I bought a bunch of that. So I did get to participate in some of these things, but if you could bring up Allstate Preferred A, you can see the huge gap down 70 cents on the close. It's already coming back here. I mean, so many dumb things happening last night. I guess it's just, liquidity is lower. People don't know what they're doing. They're chasing moves. They're going all over the place. But man, there's some dumb money out there.
Well, that's your rant. No money. Well, we're going to try and make people some good money and not be the dumb money. Be on the other side of those losing trades.
Try and educate you guys. And you know what? Our listeners are the smart money. We got, great guys in the chat here. You guys are the smart money. I get great ideas from you guys. So happy that we have a smart audience, because I don't know who's on the other side of these other trades, man, but they don't know what the hell they're doing.
And just real quick, I mean, those trades could be done so much easier. If you had I don't know, unless they just get the order at the last second, do you think like their algorithm says, sell 1 million?
Yeah, so you know what it is, and I've written, and obviously there's lots going on at the end of the month, but I've written in CFA magazine about this like 5-6 years ago, and you know what it is? The institutions all want to execute on the close because they know the other institutions will be there. There's liquidity there, so they throw out the big orders, and the other institutions' orders know there's going to be others. So institutions are trying to basically match up with other institutions at the close because they know there's more liquidity there. End of the month, sometimes there isn't. Sometimes Friday options expiration. Sometimes some funny things happen and liquidity is not there. So Just randomly throwing it out. Institutional traders, if there's any of you guys listening out there, yes, most days you can throw out some large size on the close and get done at good prices. Certain days it does not work. End of the month, funny things happen. Big orders sometimes don't match up as well as they should. And somebody lost a lot of money yesterday selling Johnson & Johnson down 2 points on the close. It's J&J. Anyways, it's already back up a buck. Now, one thing to consider if you're trading J&J is we had some healthcare news from Trump right after. There's so much news, like right after 4 o'clock. Amazon earnings, all these gaps happening. Then Trump comments on drug pricing or something. What did Trump say, Spencer?
Yeah,
what he said.
All right, let's go to Spencer here with the Trump comments, and then we're going to cover Amazon.
Yeah, good news. Good news for customers, but not good news for the healthcare stocks this morning, as the administration has proposed a lowering drug costs by targeting a backdoor rebates. According to Reuters, these rebates account for, on average, about a quarter of a drug's listing price, and that was passed on directly to patients. So they're proposing targeting these backdoor rebates that account for a quarter of all drug prices. That would mean, of course, companies having to charge less for their drugs, hence the reason for the weakness this morning.
Yeah, and on those comments, CVS gets hit hard, still trading down 3%. Walgreens Boots trading down a buck here in the pre-market. You had all the healthcare providers, like I saw Cardinal Health getting hit here. I don't know. This was lighting up in my filter. UNH, CI had earnings this morning as well, but it was down last night just on this news before. Humana was getting hit. Just a ton of healthcare stocks getting hit. They started hitting the drug stocks themselves, some of them. XLV started getting hit. So there was, some, and the S&Ps just kept rallying because of despite of all this. So anyways, I've already had my rant on that, so we won't go back into that. But just be aware that there's some major movement here last night in the healthcare sector. And if you're trading those stocks here today, that movement was to the downside.
And I would just keep an eye on, I'm not going to go through all those individually, just keep an eye on the pre-market lows, see if they align with a daily low or a couple closes or something, if you're looking to either cover a short or initiate a long in those stocks.
Sometimes these things open up a little bit too high too, so sometimes you get a shot to get something short on the close there. Like Walgreens Boots went all the way up last night, came back. I don't know why we wanted to come all the way back. It was a parent algo that was buying non-tech QQQ, which I talk about, and I was like, well, that's dumb, so I shorted it, and obviously I covered too soon, knowing me. I'm dumb too, because I always cover too soon. But anyway, I was able to short this last night flat, and I was like, I'll take that. It's now down $1, so obviously should have held on a little bit longer. But anyways, let's
go to Amazon. We got to go to Amazon numbers.
Let's do it.
All right, Amazon, the big gun, reporting yesterday after the close. The Q4 EPS there, $6.04 versus a $5.59 estimate, so a beat on that. Sales, 72.4 versus 71.8 billion, so a beat on both the Q4 EPS and the sales. The Q1 sales guidance that they gave, however, was a little bit light. 56 to 60 billion is the range that they gave. About 60.1 billion was the estimate, so a little bit light on that Q1 sales guidance. They also said on the conference call that they would expect there would be more money, more investments in 2019 than 2018. I don't think the people listening to that call liked that comment, particularly that was towards the end of the call there. And between that and the light guidance, that's your story on Amazon here this morning.
You can see the after hours chart, and it was absolutely wild here. It got hit, then it rallied way up. Then it was kind of just meandering, almost just down a little bit. And then they came up with that conference call, those comments that you were talking about, and whoosh, they knocked 40 points off of it in a hurry. And then, so it went from like 17-15 area all the way down. You can see, the second move, which would have been around that time, all the way down to like 1670. So almost 50 points they knocked off. And then, it was around 1660 then, 1665, because then Gene Munster is on Fast Money. And I mean, we love Gene. Gene's awesome. But people really listen to him, man. He's influential too. That's why you got to listen to him. He, commented on what they said on the conference call and said, I didn't like what they just said, and I'm lowering my grade of it from a B to a B minus. Immediately when he said that, they knocked another 20 points off it. So I'm like, well, they just got punished twice, because they got punished already from the conference call. And now Gene just told everybody watching on CNBC, and they're hitting it again. So Anyway, so Gene, you move stocks. I watched it fall like 20 points, like 30 seconds after you said those comments. If you're listening, Gene, I know he listens. He comes on our show. He's great. But wow, that was an impressive move there, just in Amazon. So then, it's a down 80 points, and we already said, I couldn't believe that the S&Ps didn't want to go down with Amazon down that much. We are seeing the follow through here this morning. You are seeing it drag down Facebook. You are seeing it drag down. Not much though. Netflix is down $3. So some of these stocks holding up fairly well, considering Amazon. You think Amazon down 85. You think it's going to be a tech wreck today. That's, you have tech stocks weak, but I wouldn't call it a tech wreck. So holding up fairly well.
All right, let's take a look at the Amazon chart. I'm not going to deal with anything on the upside here because you did make a pre-market low right after the initial number, and that came in at 16.18, and it's just kind of meandering here, believe it or not, for it being that busy of or that volatile stock. It's been stuck between 16.18, and then you have some pre-market resistance at 16.52. I'll look at the dailies, and the daily gives you a number at, let's see here. Wow, there's nothing on the dailies really to lean on until 1594. So if you're looking for a little bit more on the downside here, maybe wait for that psychological number of 1600. As I said, there's 1589.19, but 1600 if you could get some follow through on the downside here. It's just quiet though. It's really quiet for as big a move that it had.
Yeah. So obviously Amazon was a big report last night. That's what, is holding the market down here today to a certain extent, along with those healthcare stocks we talked about. But there is going to be some pressure on the upwards because you had two oil stocks report this morning, both good numbers here, Exxon and Chevron. Let's do them together.
All right, ExxonMobil, right at the top of the show is when they were out at about 8 a.m. Q4 EPS, $1.41 versus $1.17. Nice beat there on that. And then the CVX number that's not out yet. That's usually out at like 8:30, I thought.
Oh, CVX isn't out yet.
Yeah, that's
so maybe that's trading it up probably because Exxon's trading up.
This happens every quarter. They're always out at like 8:30.
Yeah, and I always say, what's the Chevron numbers? We say we do this every quarter on the show too. And Spencer's like, it's not out yet. But I never learn.
We do this every quarter.
I missed my window period for learning that, I guess. ExxonMobil trading up $2 pre-market. Joel, it's a nice pop. 75. Yeah. That was the old, support area in November and December that it broke down from. Now you come, we always subscribe to the old support becomes new resistance trick. Does that work here with ExxonMobil today?
Man, that's a big move for ExxonMobil. Up $2.02 coming out of quiet consolidation period. On the number, you got to 76.20. Man, I would step ahead of that a little bit if I was looking for a target. And 75.60 was a daily high. After that, you open up all the way to 76.87. But just after a long consolidation period here, really since January, now you're just popping up. It's good fundamental news. I don't know. I just think you might see some sellers in here. Being up $2, it takes a lot of stock to move that during the day. So keep an eye on the pre-market high as well as that 75.60. Probably should be some pretty good sellers at 76 as well. I just don't see this thing run into 76.5, 77, $78 today.
Merck trading up here in the pre-market. You know what? I had a little rant about dumb money. I want to have a rant about smart money here right now, or informed money, and informed in the illegal way, because I'll tell you something. This earnings season, the after hours traders or pre-market traders that are trading the numbers, trading before the stocks, I've been like right 100% of the time. It's crazy. Like Boeing's up 5 points, they blow it away. You see a stock like, Dow DuPont trading down ahead of the numbers, they miss. I don't know what's going on. If there's people or execs are thinking, the market closed at 4 o'clock and now we can tell people or something. But it's ridiculous. At a certain point in time, like you would think that some of these people are going to be wrong. Merck was trading up last night too. You had all the drugs getting the beats. Merck's trading up, and of course they blow it away because it's trading up. And I don't know who has the memo, but some of this is getting to be almost obvious that like Boeing, they would not stop buying Boeing ahead of the report. And like I said, I was like, they're giving me a 5-point lead. Maybe I should short. I'm obviously uninformed one because I don't have the memo. And, I lose to the insider trader. So I'm starting to think that it's a lot of insider trading happening ahead of these reports, and something maybe the SEC should look into. Like when you see, again and again and again, stocks trading up ahead of the report and then they blow it away. Maybe that's something our regulators should look at.
These Merck numbers were good. I don't know if they were blow me away good, but Q4 EPS was in line, $1.04. Sales beat by a hair, 10.99 versus $10.96 billion. And the EPS guidance that they gave was in line perfectly. The sales guidance that they gave was also in line. So, yeah, I don't know there. I mean, it's not a bad report. I don't know if it's blow me away.
Maybe it's not the best example. It was a Boeing one that really was like, wow. This thing, there was buyers, relentless of buyers in there. And I don't know if it was one person or multiple people, but they were relentless ahead of the report. Maybe they're just guessing right. Maybe they just do their homework and they're guessing right. I tell you, ahead of the report, these guys are guessing right more than they're guessing wrong, though. So, maybe it's clean. We don't know who's on the other side of these trades. I'm just saying, when you see something trading up ahead of the report, after hours, right into the number, and then they blow it away. And then you see another stock trading weak, and then they miss. It seems like, man, these guys almost look like they know something. So maybe we should go with them. I don't know. Maybe you see the stock trading up a buck. You see the stock trading up a buck or two. Like the Nigerians look to options activity for this same stuff. They say and see the big options. Maybe we just got to look at the pre-market after hours activity because they're trading out there too. And if they if trading up a buck or so ahead of the report, seems like at least this earnings season, and they're right. So maybe you got to go with the flow there instead of trying to fade it like I am, thinking I'm getting the lead, and meanwhile I'm getting my butt kicked.
Big old spike here for Merck, up $1.67. You just made a high at 76.23. I have to go to the dailies here, and I just see all these pesky highs above 76, really going all the way up to 76.70. I don't know if there's any actual double tops in there. I see 76.20, 76.21, 76 and a half, 76.70. I think you guys get my point. I'd see resistance all the way up to 76.70. I'd be more of a natural seller here of a long than trying to play the gap and go on the long side.
So market's still starting to roll over here. Don't forget, we got a jobs number here today too. So we're going to get
Don't
some
you
movement
forget
here in a few minutes. Yeah, I know. I'm going to have to leave here in a couple minutes to go. Just prepare myself here for this jobs number. I just cancel all my orders. So that's the first thing you do when you're prepping up a jobs number. Don't leave orders out there to be a sitting duck and get picked off. So orders are out. I just cancel them. So, and that's always the first thing, don't forget that. If it's got orders sitting out there and all of a sudden the S&Ps rip up 20 points in a second, well, if you're sitting over there with sell orders, you're going to get picked off. And, then you can say, oh, I wanted to sell it there anyways, but you would have got a better price. So don't get picked off. We're getting lots of good lessons here today, I feel like. Anyways, jumping back to the earnings parade here, Honeywell, HON, nice pop here for this stock this morning too. I guess some of these had to pop, with Amazon trading down and the S&Ps now they're trading down anyways, but when they're trading up last night, needed some help, and Honeywell looks like it's providing some help here today too.
HON with the Q4 EPS of $1.91 is a 2-cent beat. A lot of 2-cent beats on last few days. I feel like sales 9.7 versus sales 9.72 billion is essentially in line, a little bit higher than estimates there. The fiscal year EPS guidance that they gave was in line. The fiscal year sales guidance that they gave was a smidge light on that, and the Q1 guidance higher on the EPS and in line and light on the sales. So light sales guidance.
Pre-market high 147.60. To be honest with you guys, on the daily charts, I don't see anything here between now and 149.25. Does that mean
150?
Yeah, 150. Yeah. There's nothing in there. It had a real bad day back in when did we have a real bad day? I guess it was on December 4th. It lost 6 sticks. That high on that day was 149.25. Dennis, round out to that. The longer it takes to get up and test that level, the more of a little fade I would look here. But quiet consolidation ahead of the report, getting a nice pop up. Let's see if it can get to 149.25.
Continuing with the earnings parade here, there's not a ton of big ones, but there was some interesting reports here too. Let's go to Deckers. It's getting a big pop here this morning, DECK. I don't know the reason here, I didn't see the report here, but it's up 7 points. So give us some commentary here, Spencer.
All right. So the numbers for Decker's Outdoor Q3 EPS of $6.59 versus a $5.25 estimate. So a huge EPS beat on the Q3 number, the Q3 sales guidance. Also a big beat, $873 versus $819 million. So big beats on both the Q3 numbers.
Wow.
The Q4 EPS guidance was light. The Q4 sales guidance was also light. Fiscal year EPS guidance way higher. Fiscal year sales guidance way higher. So I guess they're going to have a bad quarter this time around, but last quarter was great, and their fiscal year is going to be great. So I don't know.
Wow. Retailer at a new all-time high, folks.
Wow.
And yeah, boy, oh boy. 142.50. They took it up that on the initial number. Your former all-time high, and I guess it still is a regular session, double top at 137.50 area. I don't understand this company. They sell winter boots that you cannot wear in the snow. Those.
What?
Yeah.
What do you mean? Tell me why. What's this all about?
Have you seen these UGG boots that, I
Oh.
mean, all the girls in my family have them. Spencer, you know what I'm talking about.
I don't have these boots. What are you talking
Oh,
about?
Joel, this is
The
fun.
UGG boots that are,
Yeah.
they're all fancy and fluffy,
Yeah.
but like,
I know
if
what
you take them out like in the snow and the slush, like they get ruined, and then I have to take to the shoe guy and pay $30 to get them cleaned up. You don't know what I'm talking about?
Joel's not bitter about this at all, by the way, in case you couldn't tell. Not bitter at all.
I'm not what?
You're not bitter about having
It's just
to
fashionable, Joel. It's just fashion. That's what it's all about. Everything is fashionable now. I'm trying to take off. So this is what the world has become. It's all about fashion. Anyways, my daughter gets my 1-year-old gets a new pair of boots, and they're like nice boots, black boots. And I'm like trying to unzip this zipper to take her boots off for like 5 minutes. And I was like, I can't get the zipper off. I finally asked my wife, I'm like, how the hell do you get the zipper off? She's like, oh, that one's just for show. You have to do the zipper on the side. I was like, oh my. So I'm trying to unzip a zipper that doesn't even zip. I'm like, it's just there for fashion. I'm sitting there for 5 minutes trying to take off her boot. The 1-year-old's getting fed up with me. And I'm trying to unzip a zipper that doesn't even zip. So there's 2 sets of zippers on it. One is for looks and the other one's a hidden zipper that you got to undo. Is that what the world's become to? Or nothing's about, it's all about fashion now. So I'm having a rant on this too, Joel. So I agree.
Dumb money, and dumb shoes.
137.50. That's the old double top, the old all-time closing high. We'll see what happens there. I don't know have the all-time closing high, but the all-time high is right up at the 137.50 area. All right, Dennis, get out of here.
Yep.
Jobs
all right.
preview, and then Dennis is going to disappear.
Dumb money.
I'm disappearing now.
Dumb money and dumb shoes this morning on today's show. The consensus expectations for the non-farm payrolls are for this coming jobs number 165,000 is the estimate. Unemployment expected to remain unchanged at 3.9%. Average hourly earnings, expected to have grown 0.3% month over month. So that'll be coming in about a minute and change. From now, Joel, what's the word here? Any action in the screws?
We drifted lower, and actually, I took my eye off the SPOO here, and I thought that 96.50 area, 96 quarter is your low, but it's just a daily pivot. It's not a huge number to lean on here. A lot of room under that, down to Thursday's low at 75.75. I don't know. I just don't think they're going to just pound it down 20 handles on the number, but anything can happen here. On the upside, what am I looking for? You got some confluence here. 27.04 is mid-range on the session. And then you have the high close on the rebound at 27.0450. So good numbers all over the place ahead of the number. We will be coming out here in just a few seconds. I don't have seconds on it.
And remember that last month had the big beat on the non-farm payroll. 312,000 jobs added in December. That was like 130 higher than the estimate. So I don't think we're expecting. Oh, Brent's telling me it's a huge number again. What do we got here? 304 is the non-farm. Wow. Again, 2 months in a row. Big beats on that. Yeah, Okay, so 304,000. Remember, the estimate was 165,000 for non-farm payrolls in January. Unemployment expected to remain unchanged at 3.9%, and in reality, it went up to 4%. So a slight uptick in unemployment and a huge number of non-farm payrolls for January. 304 again versus a 165,000 job estimate.
So are we having a recession now? What everyone was worried about was maybe not. Maybe the Fed is okay. Maybe they're just sitting tight while we see when the economy is actually going to slow down. You did get a pop on this, all right, and you are trying to go green on the session, and we are flat here at 27.0450. Let's see what that was our first objective here on the long side. Yesterday's high, 27.09. That would be Thursday's high. Pre-market after hours high, 27.1175. Seems like a little battle going on in the close here. As I mentioned, close is also mid-range on the session. You just get a little pop up to 27.0575, but looks like things are going to settle down here and battle it out. And no two-way action on this one as of yet. We just had the pop. We haven't had the drop. We'll see if the drop is coming here. We'll see what is going on with Dennis here in a few minutes, or we'll just take it right to our guest at 8:35. Spencer, I think Dennis is maybe getting some trades off. So you want to cover a few more reports?
Sure. Well, and real quickly on the jobs number is the average hourly earnings did rise 3.2%, which is what the estimate was. So in line with that number, and the slight uptick in unemployment, I don't think is that notable. But the 2 months in a row for big beats on the non-farm payrolls is surprising, to say the least. I think.
Well,
And
I mean,
so what's happening here in typically the banks and TLT are the first to react. Are we seeing anything in any of the banks?
you know, on Bank America, which I have no reason why that got tarred and feathered yesterday, except that I covered a short the day before. That's up 8 cents. Your financials, there's a little bit. I think there's a downgrade of Goldman Sachs here to a sell. So that's weighing on your financials a little bit. Let's see what the TLT did here. Man, TLT's quiet here. It's trading down a little bit here. But nothing. I just don't think rates are going anywhere. Everyone's worried about a recession. Everyone's worried about the Fed being behind the curve. Inflation, I think we're just plodding along here. I don't see, really, I'm looking at the futures move, and then I'm looking at all the top stocks move here. And the stocks, man, I am just not seeing a lot of movement here yet. ExxonMobil did fade off that 76 high. It's only up $1.42 now at 74.70. Morgan, as I said, Morgan Stanley's flat, but that got hit in the pre-market trading. I saw that trading under 42. Goldman, I believe, was hit with a sell rating. That's trading in the red. Amazon, what's Amazon do? Amazon's trying to get away from that 16-18 low and starting to creep higher just a tad. And let's see what other stocks we're maybe doing.
This is interesting.
Someone asked about deck here.
Well,
Deck's still trading up. What do you got for me, Spencer?
Interesting comment from Paul and Monica on Twitter here. Of course, he's a friend of the program. Paul noted a big downward revision for the December jobs number. It was originally 312,000. They revised it downward to 222,000 now. So a huge downward revision from last month's reading. Slight upward revision in November's reading. So I'm wondering now if we're going to see the same thing next month with this month's reading. So we'll have to wait and see for that. But a huge downward revision on the December non-farm payroll figures. So something to keep in mind as we go forward here with this big number from January. But it is 8:34. So let's take our first break of the day and grab our guest, Lydia Idem Finkley. She is a Forex trader. You can find her at faithmitefx.com. And we'll be right back in a moment here with Lydia. Welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick, now joined by Lydia Idem Finkley, as you can see on the screen here, Forex trader, faithmightfx.com. Lydia, how's it going this morning?
Pretty good, pretty good. How are you?
We're doing all
Thanks
right.
for having me.
We're doing all right. We're trying to react to this jobs number here. Give us your initial thoughts. Big beat.
I think me amongst many are really surprised by the beat. But I think for me, what caught the eye was the drop in wage inflation, or in earnings, as the report says, which is a tip towards inflation. And that is really one of the main inflation numbers that the Fed watches. And I just wonder if that would be why we got such a change in language and what that means going forward.
So to expound on that, so you're thinking that I thought the Fed came out a little bit more dovish. So with the numbers that you're seeing from this, and it was the increase in the hourly waging, you think maybe they're not going to be so dovish?
No, it was a decrease. It was
okay.
Actually, so that's what caught my eye. The number was huge. I think the revisions too is also interesting. I don't think that's a big surprise. We might even see a revision from this number given the shutdown. But it was the drop in the wage earnings that really was interesting.
So, all right. So I'm sorry, Spencer, go ahead.
So Lydia, let's put this in the larger perspective here. With what Jerome Powell said earlier this week and what this jobs number says, what does that do to paint your picture of the economy going forward and what the Fed might do?
I think as far as the economy, I would look toward. I'm really looking at the earnings. I'm looking at corporate earnings and what comes out of earnings seasons right now. Not really looking at the Fed so much in terms of what it means for the economy, but what it means for the dollar is something else. I think we could see some dollar weakness here. More so, I thought that going into the Fed, we would actually get an uptick in dollar strength, right? And so that kind of has taken the air out of that balloon, but the dollar hasn't sold off in a major way. And I think that is really something to look at. I'm really kind of watching what kind of reaction we're going to get out of this jobs number. The dollar is also not taking off on this big number. And I think it's because we're looking at that hourly earning.
All right, let's move on to the Brexit. We had a guest on earlier in the week from across the pond, and a lot of indecision there. What's going to happen? Let's look at the British pound here, the implications of Brexit. I mean, you've had some rallies off that 2017 low. I guess you have to lean on that. Give us your outlook for Brexit and for the British pound.
So the rallies actually stalled out at a really nice resistance level this week. And I think what's interesting is that the hint of no deal, which 2017, 2018 would have taken the pound out, what we've seen so far this year is that it's actually, the market's been liking that. It's actually like the kicking of the can down the road, and we've seen the pound rally in the face of that. So I've always contended that there's going to be a deal, and whatever kind of deal happens, it's not going to be good for the pound. So it's been interesting to see the pound's reaction to that so far, and I think that the pound can still come off, but it's been holding up very nicely in the face of all of this uncertainty, and I think the uncertainty is kind of ridiculous, to be frank. And we're seeing that the pound is actually stalled out right now so far. And when we look at the pound dollar right now, we're looking at, is there going to be dollar weakness? Is there going to be pound weakness? And we've just been stalling. But if we look at cable just specifically, holding above $1.30.50 here is quite bullish.
All right, let's just move on to the implications for the banks here, the European banks. I see Barclays Bank trading near a multi-low. We all know about the troubles with Deutsche Bank. Let's just talk about the European banks. And up to this time, it really hasn't had a major negative effect on our banks here. We just, are we decoupled from them and our banks can act independently? What's going on over in Europe, or eventually is that going to catch up with us?
I think that our banking systems, global banking systems are really just supported by central banks. And I think the central banks are quite coordinated. I don't think anyone is doing too much out of step with anybody else. think the Federal Reserve has taken the lead. Some other of the stronger economies, like the Bank of Canada, have followed. Other central banks, like European Central Bank, Bank of Japan, have just kind of stayed put and have done a little bit of jawboning. They hint towards a tighter policy, but they're really just letting the Fed do it. So I think banking systems overall are very well supported by our central banks around the world.
All right, so kind of a coordinated effort here. So we talked interest rates here. We talked the British pound. All these things have effect on the euro dollar here. What are you seeing fundamentals and technicals in the euro dollar?
Yeah, the euro dollar, fundamentally, when you get a weak dollar, you're going to have a strong euro. And what's been happening also with this weakness in the pound, we're also seeing a strong euro. I think the interesting implications is that the euro strengthens out of all of the uncertainty around the Fed, all of the uncertainty coming out of Brexit, and what the Bank of England would do in response to that. And we could actually see the euro higher. I think a hold above $1.15 is very, very interesting. I think you see bears start to cover, and those bears would be really your dollar bulls start to cover at above 115.
Lydia, you said you were watching corporate earnings. I guess we're about halfway done with this earnings season, with this being the heaviest week of the quarter. What is your take so far on how this quarter has been for corporate earnings?
I think it's been surprisingly strong. I mean, it's been mixed, right? We've had a mixed bag. I believe it's not been strong across the board, but I think given some of the weaker holiday themes and even things that have been coming out of the governments, and not just the U.S. administration, but also like the U.K. Parliament, Brexit, and other European governments. I think our earnings have been strong. I think companies have really been holding up. I know we've been seeing some layoff numbers too from other companies, so it's been mixed, right? So, which also speaks to that strong jobs number and why I think it could be revised. I mean, we've seen a lot of layoffs announced too, so it's been very strong overall. I think that's why we're seeing the stock and equities markets kind of strengthen now and get a lift. We saw a nice break above resistance in the S&P 500. And it could be that this bear market might be ready to turn around and recover. I think we're on good footing as far as stocks and corporate earnings go.
Yeah, I was just going to bring all this in. Obviously, the currencies and interest rates are all, related and have effects here on the stock market. I guess you could call it, if it was a bear market, it was a pretty quick one here. Just your overall, market projections here, and just for all the people that kind of sat on their hands during that great dip in December, late November, early December here. Do you think those levels are gone for good here and we're just on our way back up to new all-time highs, or the market is going to have a little push and pull in it still?
Yeah, that's a great way to put it. I think a push and pull is more likely than just a takeoff to the upside. But we cleared 2,700 and we close above that. Next week, we want to see some follow through higher. We get a follow through higher. We stay above the 2,700. We don't dip back down into 2,600. I'm watching the S&P. I think we have a very good opportunity, or it's a very good likelihood that stocks go higher. Right now, the momentum is with bulls.
All right, that's a good way to leave you off here. Lydia Idem Finkley has been on with us. She's a Forex trader. You can find her on faithmightfx.com. Lydia, as always, thanks for the time and have a good weekend.
Thank you. You too. Thanks, guys.
All righty. Joel, any changes here in the
this is a level like morning here, Spencer. We just on that recent pop, we just went to 09.25. Holy moly, yesterday's high 09 even. So right now, I mean, we're trading pretty technically. Things are calming down. So now we will keep an eye on that 09.25. That coincides with yesterday's high. I gave you all the pre-market high at 27.1175. Little number above that. Like, don't get all crazy if we take out 27.1175. We do have your December 7th high of 27.1375. So that's on the upside. On the downside now, after being in the red, pretty not deep in the red, We are now above the close. I'll be keeping an eye on that closing price, which was the high close of the move at 27.0450.
Dennis,
Some movement, but
Dennis
it wasn't.
back.
It was just like you said. It wasn't a lot of chop there, Joel. It was kind of just a slow grind higher there
Yeah.
after the number. They grinded it up. They grinded it up. They grinded it up, and they continue to grind it up. So you know what's interesting? A lot of tech stocks have turned green. I mean, they are completely shrugging off the Amazon down 71. Which, maybe that's going to be the case here today. Apple's now trading up 76 cents here. Microsoft has turned to the green. It was trading the red before the number there. Facebook has turned to the green. It was trading the red because of Amazon here. So the techs have turned around and actually staged a pretty nice little comeback there. Netflix was down over $3. It's only down $1 there now. So don't call it a comeback, but I'm calling it a comeback on a lot of these tech stocks there. AMD was in the red. NVIDIA was in the red. Everything kind of popped up with it. So they kind of just bought stocks across the board.
All right. Seeing in the Google YouTube chat here that Twilio is halted. Is that correct? As we moved up, strong move yesterday. Spencer, you seen any news on Twilio?
I don't know.
No,
What
okay.
is.
I don't.
Okay.
I don't even see a.
I don't have that.
Yeah, I don't have that either.
Okay. All right. We'll keep an eye out then. Dennis, I just want to go back. 2-day move in GE. Are you just loaded up here at $10 or?
SendGrid is halted. So
Send-
SEND.
Okay.
Yeah, that's a stock that's halted, not Twilio, and that's supposed to reopen here today. But no, I don't see Twilio halt.
No,
Okay. 2-day move in GE, or is that just too much of an up move yesterday for it?
Yeah, but it's been trading down. It's got a downgrade from Vertical Research. Is that our buddy at Vertical?
No.
GE did get downgraded this morning. Different analyst.
That's not John Inch. That's what John's at Gordon Haskett.
No. Who's at Vertical that we know?
Gordon Johnson.
Yeah. So that's what I was asking. Is it Gordon?
Oh no, I know he doesn't. He
doesn't cover that. So okay, I just didn't know if he covered any of those too. So, anyways, it did get downgraded here. Vertical Research, a little bit of pressure on it here this morning from that. But I don't know. These earnings stocks are fun. So you had the big pop. You know what? It came significantly off its highs. It wasn't like a close strong, Joel. So I don't know, expecting a rebound there. And that being said, I'm actually long a little bit of G because I just thought it got done overdone last night when it got down to the 9s. But I wouldn't be, I'm kind of sitting on the hands here, even though I'm going to be dumping this at the open. I just thought, when it got down under $10, it's a little bit down too much, but just for a day trade. But I'm very torn on GE here. I mean, it's got the big pop, but it gave some of it back.
A lot of it.
The easy money's been made on it. I mean, it's had such a run here already, had the upside capitulation move off it. So you're coming into GE now, like for a longer term trade. I feel like you're way late to the party.
Yeah, 1077 was yesterday's high. I don't think it's going to get up to that level today. I think that you're going to see sellers, maybe I missed my move to sell this. Well, it's still in double digits. But 1016 was the close. So if it goes green and stays green over the 15-minute bracket, I may lean on the early morning low, see if it can sneak up an upper 10 handle. Big old gap between 976 and 928. GE traded 370 million shares yesterday. So wow. Big volume day on the upside. Let's see if we can get some follow through like we did in Apple and AMD.
This market, though, so many stocks have turned green here that, like last night, I thought it was silly that the market was trading higher because it just wasn't the stocks that were green. It's changed here now. The stocks, are green here. There's a lot that are trading, actively up here right now. So there's a lot of help now for, the Amazon being down. So if you're coming here now and saying, Amazon's down 76, I'm going to short S&Ps, it's a different story here this morning because you do have a lot of stocks that are in the green. And just looking even the bounce back from some of those gaps down yesterday, but Exxon's up significantly, Chevron, Merck, those are all big helps. Those are major components, obviously. Honeywell, a lot of good news here from other stocks this morning, so that is going to help. It's still going to be wild because you got Amazon's going to weigh on some of the tech stocks here, so I'd expect some chop. Obviously, healthcare, we've already talked about that. That is going to be weak here today. I'm looking across the board. UNH is down 4. CI is down almost 10. It reported bad day for it to report because it was already down ahead of it. And then it reports again, just another excuse to sell more. CVS is trading down $1.75. So you are seeing weakness on those Trump comments still. So keep that in mind. There's some themes here today, but you got opposite directions in some of these themes, which, means probably a lot of chop in the S&P.
And Eric's mentioning there is some news. U.S. announces pullout from treaty with Russia. That's been the centerpiece of nuclear arms control since the Cold War. So, man, let's get up and tweet something negative about healthcare. Let's pull out of a deal with Russia. I mean, whatever. Let's just do whatever. No, let's just build a wall. Let's pull out of Russia. Let's meet with North Korea. Let's pull out of Syria. I mean, it seems like, just a very coherent political plan there. But all right, let's move on here. Spencer, do we got some more earnings reports?
We do have a number of earnings. We also have some interesting ratings this morning. So
give us the ratings. Let's mix it up a bit.
Well, the two that we were highlighting on the pre-market show was a couple from Societe Generale. They were downgrading Morgan Stanley and Goldman Sachs to sell, I believe. Was that what it was, Dennis? Yep.
Yeah, both those get ratings from Society Generale, however the hell you say it, downgraded here. They don't have much influence on U.S. stocks. So you did see them get hit initially on that, but it's kind of, they're shrugging it off here to a certain extent. I mean, the banks all seem to want to trade together anyways. But, if you do look, there is a little bit of pressure on them because Citigroup and Bank of America trade in the green, and Morgan Stanley and Goldman Sachs are still slightly in the red here. But I wouldn't expect a whoosh, whoa, downgrade to sell. If it came from anybody over here, it'd be different. But I think when you get sometimes, some of these analysts that aren't as well followed, or are coming from banks that are overseas, I think it's a different story.
Yeah, Deutsche Bank in the red here by 31 cents. Just a really peculiar move in Bank America yesterday. Basically, just straight down $1. Gap down and just continued that way. Morgan Stanley, I had a small short on that on yesterday, threw in the towel on the close here. I was just looking at this whole $42 area. We are trading at 42.10. Just looks a little tired here. So I don't think that will be one to be participating in the rally. But with all the movement, I was watching this thing, all the movement in the spoos, this thing was trading within a 10, 15 cent range. And just because Bank of America was going down didn't necessarily affect that. But keep an eye on 42 here in Morgan Stanley and Goldman starting to look tired here. I guess you really can't really get worried about more downside until you take out 194.53. I wouldn't wait for that low on earnings day. That low on earnings day was 185.60, and then you get a big old gap in there. So financials starting to look a little bit tired here.
Back to I was going to go to Semantic next. It is near the top of my scanner here this morning in terms of stocks that are up. They had earnings after the close yesterday. The Q3 EPS for SYMC, 44 cents versus a 39-cent estimate. Sales 1.21 versus $1.18 billion. So beats on the top and bottom line for Semantic in the Q3. The Q4 EPS guidance was in line. The Q4 sales guidance was in line. The fiscal year EPS guidance also, actually that was higher, and the fiscal year sales guidance was higher as well. So a higher fiscal year guidance in line, Q4 guidance, and Q3 beats on both the EPS and sales.
It's a nice pop for Semantic. Lots overhead resistance above 23. I don't know what the after hours highlight was last night, but
yes.
23 and change.
23.
Yeah, they you know what, man, these levels work. I mean, it's simple technical analysis, but the market sometimes trades very simple. And you just, Harlan Pine used to say to come on our show regularly, a few years ago, and he'd always say, bring up a chart, look at the daily, what level jumps out at you? And when you look at this, I see multiple highs up there around 23, just rounding it there from the November, December. Yeah. And boom, that's where she goes to. So it's funny how these levels work. I mean, you've talked about levels, for years, Joel, and, it's just simple trading, but simple stuff sometimes just works.
Yeah, I mean, their target, using these things as targets is good. Initiating a short in a number like that, may not always be the best thing. But if you have if you are trading, I don't know what platform you're on, TOS or Robinhood or TradeStation or whatever, if you have a target in something like this, sure, it may like really exceed it in the after hours and stuff. But keep an eye on those daily levels when you see those kind of movements here. What do we got? We have 4 more minutes, Dennis, here till we get our last guess. I'll let you take the lead here with what you're seeing, and then we'll bring on Bill Santiago.
Just a mixed market. I'm seeing some weakness. Obviously, we got Amazon weighing on the market, being down 73 points here still, so that's putting some weight on. But then you've got other stocks that are trading significantly higher. So it's very mixed here today, so I would expect that to continue. You are seeing the stocks I talked about early in the show, the ones that gap down, those are bouncing back, which always seems to happen. Those go down on just an imbalance, and they come right back almost immediately in some cases. McDonald's is trading up $1.28. That is because it went down $2 on the close. There's no other reason behind it. Johnson & Johnson is trading up substantially in the pre-market, up over $1 because it ran down $2 on the close. If it didn't have that run down, it would probably be down because of the healthcare thing, but it's bouncing back because obviously the 2-point down swoon on a big sell imbalance at the close isn't fundamental information. They usually bounce those back. Starbucks, if you look at the close at 68.14, it's at 68.80. Well, no, it's just right back to where it was 2 minutes before I had the big sell-off there on the big closing, the big sellers on the close. Coca-Cola, same story. Coca-Cola is trading up 37 cents in the pre-market. Again, Coke gap down 60 cents on the close. Huge move for Coke. I mean, that gave back, to put it in perspective, the stock took all day to run up 60 cents and gave back on basically one print. So it's crazy, and there's some good opportunities there if you can be on the other side of some of these trades.
Okay, all right, and ratings. Do we want to do?
Was there anything else, Spencer? No. Was Talk Society Generale, the Paris analyst there? Anything else?
No, we also mentioned the GE downgrade. Dow DuPont catching a downgrade this morning from JP Morgan down to neutral.
That's chasing price.
Yeah, and really outside of that, I don't see too many other upgrades, downgrades, or initiations that have caught my eye that are either going against the grain or are particularly noteworthy for a downgrade or price target change. So a little outside of those, pretty quiet in analyst land, but we do have more earnings, and I want to real quick just cover the Chevron number, which was out at 8.32, as we say every quarter. So the Chevron EPS $1.95 versus $1.87 estimate, sales 42.3 versus 46 billion. So a mixed report, EPS beat and sales miss for CVX.
I mean, it was already trading here, so it really didn't move anywhere from where it was trading prior to the report. Maybe it was Exxon helping it. Maybe it's that everybody just knows the numbers, it seems like, before they come out. Chevron, CVX, up 1.44%. We'll let Joe break down the technicals.
Yeah, you did get a pop here over 117 to 117.46. A daily high. Where do your daily highs come in here? 117.72. That was your high on December 12th. That coincides with your pre-market high. I'll keep an eye as potential resistance here. If you're taking any cues here from ExxonMobil, we have faded off that spike high. So just keep that in mind if you're trading CVX today. Those stocks will sure have some good volume and some good movement. All right, Triple D. Have a good weekend here, and we'll be checking in with you on Monday morning.
All right, take care, guys. We've got a great guest coming, so stick with us.
We'll be right back in a moment with Bill Santiago, a comedian and trader and friend of the program. Welcome back, everyone. Pre-market prep, Spencer Israel, Joel Elconin, Dennis Dick, now joined by Bill Santiago. Bill, how's it going this morning?
Hey guys, how's it going? I'm sorry, my Skype isn't working. I don't know what's happening.
It happens, man. What can I say? It's Friday. We're making it through.
Hey,
we're making it through the week.
It's Kremlin. Wait a second. This is Benzinga.
This is it.
It's Kremlin.
Oh,
Is Joel running your Skype?
Oh,
I knew that was coming.
Joe, before we start, put it on mute.
Yeah, then everybody hears. I like to hear the background stuff, though. So, Bill, what's going? Are you staying warm?
I love it.
What's the temperature down there?
It's too cold for me. I've got my oven on. I've got my hat on. I've got my long underwear on. It's too cold.
Did you go get a goose jacket? Canada goose jacket?
It's not Canadian goose. It's Canada goose. Don't you listen to CNBC? Dennis, before we start, I gotta congratulate you. Dennis, before we start, I gotta congratulate you on GE. You called it 666.
That's a new trade. The 666.
The satanic bottom.
We call that the double trade.
Bottom.
It was. Thank you. They would call that the double trade. S&Ps did. So next time a stock has a significant sell-off and it gets down to 666, I'm buying it. The double trade.
It's the buy signal from hell. You can't miss it.
The buy signal from hell. Oh, that's good. So Bill, what are you trading over there? What's going on?
What's trading? I'm trading everything. You missed Square. I caught Square.
I missed everything.
I missed everything.
Nice.
I completely missed December 24th. I don't know how they expect. I'm wrapping presents. I got kids. The market was open for 15 minutes. It was not a buying opportunity. It's a crying opportunity. I missed everything.
It was a crazy sell-off. It was crazy, and it came back just as crazy. I mean, this January is the best January in 5 years. So I kept thinking we're going to pull back to buy. We never did. So I'm sitting here with my long-term invest portfolio underinvested, and I got a little tear in my eye for it. So and we continue to grind higher. Amazon down 80 points. It doesn't matter. S&P's higher.
Yeah, Powell. You can thank Powell for it. There will be. We're not going back to December lows because he did a total about face.
So you're following the Fed here? Do you have a invitation, or do you have anything good on Jerome Powell there? I don't think too many people can do that.
He filled the punch bowl. The party, you're not too late to the party. He filled a punch bowl, and it spiked with data dependence. Turns out the best way to get over a Fed hangover overhang is just to hang on for more punch. There will be more punch.
Okay, all right, that's a good way to look at it. Bill, the other thing that when you were on the show last time, we had a good time with terminology that we use on the show, and I know you're a fairly new investor, and we use a lot of terminology on the show, a lot of slang, a lot of this, a lot of that. Do you have any new ones that have caught your attention lately that you want to ask us for further explanation, or have you come up with some of your own interpretations?
Well, I tell you what, lately I'm noticing that a lot of the trade talk, a lot of the stock talk, a lot of the financial talk, it's very obsessed with food. It's very gastronomic. It's like the Food Network out there. Yeah, look,
well,
I was watching like CNBC, and I can't. It's like, look, Amazon is eating everybody's lunch, although the market is still digesting the acquisition of Whole Foods, which was too rich for investors to stomach. But still, it's okay to nibble on the low-hanging fruit, as long as you're not comparing apples to oranges. At least when it comes to Apple, especially now that Powell has filled a punch bowl, and that sugar high sweetens the deal.
Bill,
not to mention the buybacks, which are just the icing on the cake for companies that want a bigger piece of the pie. As corporate America cannibalizes itself with no incentive to ever trim the fat. But if there's a trade deal, well, then Wall Street gets the whole enchilada. Unless the trade deal is already baked in.
Bill,
He's just keeps going.
How many more of these are there?
I'm going to keep going. I love how traders are always wondering whether or not it's baked in. Is the good news baked in? Is the bad news baked in? Is it baked in? I think it's baked in. Would you say it's baked in? It's definitely baked in. Half the time, people assume something was baked in, the oven wasn't even on.
What about if you're having a really bad trade? Like, let's say you come in long Amazon today. You're puking all over the desk, right?
That's right. I missed that one. Thank you. Look, if you could, the key to this market is attitude. I try to stay somewhere between cautiously optimistic and pessimistically crapping my pants. That's the sweet spot right there.
Okay, Bill. Now, so are you just coming out with this stuff? Is this material you already have, or do you use this in your routines? Because if you do, I think that we deserve a piece of the pie on it or whatever.
He's got to do like a show, like a Wall Street, just on Wall Street. He's going to do one of those just on the stock market. Man, he gets some people listening to that.
One day.
We're coming for that.
Right now,
when you do the Wall Street show,
we have to talk about the question, the one remaining question. There's a lot less uncertainty in the market today, but there is one burning question. Who gets the 35,000 first? Tesla, Model 3, or the iPhone? I'm hoping it's a tie. If it's a tie, Tesla and Apple can merge, and you get a 2-for-1. You buy an iPhone, you get a Tesla for free.
All right. So what do you, just real quickly here, we'll keep you a few more minutes here. What do you got going on in the market here? I know we had the big decline. Hopefully we were buying the dip here. Any comments on the market?
Yeah. I'm really into volatility lately. I figured out how to play the VIX.
Oh, really? Okay.
Yeah, I'm all in on the VIX. Well, because it makes sense to me. The VIX, if you think about it, it's really an inverse complacency index.
Are you talking about the cough drops, VIX? Or are you talking?
Look at Joel. You can do
volatility
Joel,
you're hanging with him.
When volatility is at an all-time low, it really means that complacency is through the roof. So you want to short complacency and vice versa. I've got a handle on it.
You do, man. And also, just real quickly, you don't always have time to listen to the show live. You're a busy guy traveling the world as a stand-up comedian, even though you haven't been to Detroit yet. Tell us, how you found the show, when you listened to the show, and how you would incorporate it into your investment routine.
Well, I'm really obsessed with all of this stuff now, so I'm always looking for new sources of information, and your show has become one of my go-to sources. It just keeps me so in tune with everything that's going on. But I don't listen to it. It's pre-market prep, but I listen to it post-market. For me, it's post-market prep. I listen to it around 2 o'clock in the afternoon, and I get a handle on everything that I missed. It's fantastic.
Okay, well, great. All right, Bill. I know I've been bugging you about coming to do an appearance here in Detroit. I am available. I think I'm a pretty good setup guy for you. So, I don't know if we did it. If we did it at the summer, I will see if I can get Co-America Park to do that, because we could probably get 40 or 50,000 in there. And if we did it in Ford Field, we could probably get 75 or 80,000.
Okay, that sounds about right.
Bill,
I don't perform for. I'll just look. If it's just you, if it's just you three, that's fine. I don't perform for any less than 3 people. That's my minimum.
Bill, real
Okay.
quick before I let you run, Bill, where are you performing next?
Next, I'm in New York. I'm doing the New York Fringe Festival with my show, The Immaculate Big Bang, which isn't about money. It's about science and religion. My 2 favorite frenemies.
All right.
Okay. Go ahead, Spencer. Wrap it up.
That's
Dennis, thanks for sticking around.
Yeah. Oh, I got to stick around for
Hey,
Bill.
Did you notice that Kramer was so happy with Powell, he changed his dog's name to Jay Powell?
Did he do that? Was that for real?
Yeah, his dog's name. I salute you, Chairman Powell, for making the right decision, for caving in, for having the courage not to care about your credibility. I'm so grateful. I'm changing the name of my dog to Powell, formerly known as Xilinx, formerly known as NVIDIA, formerly known as MoviePass.
Don't you feel sorry for the dog? Like, he must just respond he changes his name so many times. He doesn't know what the hell to respond to anymore. I mean, the dog's now got to respond to Powell. I mean, the dog must just be so confused. to have to
He said
respond to so many different names. It almost needs to, like, the dog's gonna have to write all this stuff down, all these different names that he's had.
He says, don't worry about the dog. Don't feel sorry for the dog. He's not too bright, but he is data dependent.
Oh my God. All right. Thanks a lot, Bill.
See you guys later.
All right.
See you, Bill.
You can
Bye-bye.
find Bill at BillSantiago.com. That's going to do it for today's show. Hope you enjoyed that little bonus segment there. Thanks to Bill and our other guest, Lydia Idem Finkley. Thanks to all of you in our chat rooms on YouTube and premarket.benzinga.com. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. And on that note, everyone, hope you have a good rest of your day. Have a good weekend, and we'll see you on Monday.